The past few weeks have been an absolute roller coaster for both BMNR and the Ethereum ecosystem as a whole. We saw massive macro drawdowns 2 weeks ago, and we've seen a recovery rally over the past week, with BMNR rising about 20%. But there's a massive update that's happening in just 7 days that completely changes the paradigm. In this video, I want to cover that along with all BMNR related news that I've seen this week. And if you've been following this series, you know that this is going to be a big video, so let's jump right in. This is my BMNR recap for the week. If you do enjoy these videos, please consider sharing them out so that we can reach a wider audience and so that I can keep making more of this content. BMNR has been having somewhat of a recovery rally here. Over the past week alone, it's up about 20%, but still down when compared to the last month and when compared to the last 3 months. So we're seeing somewhat of a bounce back after this massive drawdown that entirety of crypto saw, and most of the market also saw from an equities perspective. But we're definitely not anywhere near all-time highs just yet. So let me first start off there with the accumulation of institutions buying up this dip that is contributing to this relief rally. And this is actually really fascinating, the number of whales versus the Bitcoin price. This is not Ethereum, this is not BMNR, this is Bitcoin. But you see this massive surge here in whales relative to the price. So as the price has been falling, it's been the large wallets that are buying into the fear. Much of that is institutional. Here you have just another view of the whales versus retail delta. And you can see this massive spike up here in the delta between whales and retail investors. Whales largely have been buying up this dip. You see, institutional money is also flowing into Ethereum. Ethereum spot ETFs just posted 4 consecutive days of net inflows for the first time in the last 2.5 months. Accredited and institutional investors are turning positive on Ethereum, and you can see this here with the total Ethereum spot ETF net inflow versus outflow across the board from Fidelity, Bitwise, BlackRock, Grayscale, VanEck, Franklin, and so on and so forth. You're seeing that they're buying this dip this week for Ethereum. BlackRock just bought 1,104 Bitcoin worth $100 million and 16,000 ETH for $50 million ahead of the Fed balance sheet release. The rumors are getting confirmed. The Fed may have started printing and buying. Here you have Fidelity's tokenized money market fund on Ethereum surpasses 250 million in assets under management. Fidelity is a private company with $6.4 trillion in assets under management. And here you can see how the AUM in Ethereum is rising over 250 million assets under management in Ethereum. And what you have to understand with Fidelity having 250 million in Ethereum is that this only happens if the rails of that ecosystem are good enough to support the volume, because money market funds need liquidity, they need precision, they need exact pricing, they need settlement infrastructure, and all of that to happen in a seamless, frictionless way. So really, this speaks to the ecosystem for Ethereum as well that encourages so much adoption from funds like Fidelity. And this is more of the same. Here's all the ETFs, and here you're seeing across the board that they're buying more Ethereum. And this is also interesting. Here you can see a line item for staking, and you have Grayscale here, which is already staking, but then you have everybody else who's pending. And I'm going to have an update on that too with regards to VanEck. But a lot of these Ethereum ETFs, they're going to become stakers in the future as well. And of course, it wouldn't be a BMNR weekly recap if I didn't show the open interest on exchanges plummeting even as the price was plummeting. Ethereum exchange reserves just hit an all-time low as stablecoin liquidity hits record highs. And Joseph here says that Ethereum recovery is spot market driven, not futures. The open interest is at $2.4 thousand levels. And Ethereum is scaling exponentially with the Fusaka upgrade that's going to come soon, and we're going to talk a lot more about that. So again, the reason why I bring this up is this consistent call out for supply shock, and we've not been seeing the supply shock because the price has been falling as a result of liquidity and others, but the fact remains that we're seeing less and less Ethereum on the exchange reserves. Now, let me just very quickly address the staking component. VanEck this week just locked $37.9 million worth of Ethereum into staking. They staked about 12,600 Ethereum tokens of their ETF worth about $38 million. And of course, all of that is going to start generating a yield, and all of that supply is going to get locked up and off of exchanges, right? So this is why these two things are related to each other, because as you see more institutional accumulation, you're going to see them staking, and you're going to see all of that supply being taken off the exchanges. Here you had the government of Bhutan also staking the 320 ETH that they bought, worth about 920,000. Obviously, not a needle mover, but it was really interesting to follow the story through and through, because we talked about the government of Bhutan a couple of weeks ago, where they had just acquired this ETH and they're immediately now staking this ETH as well. And you're going to have this recurring trend across the board. More and more institutions and retail investors and digital asset treasury companies that buy Ethereum are going to be looking to stake that Ethereum and generate a passive yield through the staking rewards. Let's move on now to some government and regulatory pieces that we're seeing. So here we saw Texas became the first state this week to purchase $10 million of BlackRock's spot Bitcoin ETF, according to the Texas Blockchain Council. So Texas is accumulating Bitcoin. Of course, I talk about Bitcoin and Ethereum here almost interchangeably. And the reason why is because it speaks to the adoption of crypto in general. And that is, of course, a rising tide that raises all ships. And here you have the Vice President of the United States talking about a key regulatory piece. Let's give it a listen.
Maybe the most important thing that we did for this community, we reject regulators and we fired Gary Gensler, and we're going to fire everybody like him.
So this might not be new news to you. He said we fired Gary Gensler. This happened months ago. Gary Gensler was, of course, the head of the SEC, generally seen as an anti-crypto, regulatory body. The interesting thing that JD Vance says there is we're going to fire everybody like him. In other words, this administration is very crypto friendly. We want to adopt crypto actively in the administration, and we want to move towards installing regulators that are very crypto friendly. And just to support that even further, here's the president and what he has to say about crypto.
Pledge that we would bring back American liberty and leadership and make the United States the crypto capital of the world. And that's what we've done. And under the Trump administration, this is only going further. You're going to do really well. I mean, I'm so proud of what you've done in the last couple of years. And
he wants to make America the crypto capital of the world. He says that the US is on track to become a global crypto hub and that the sector is going to continue to accelerate. How, you might ask? Well, one of the things that Trump has been on recently is replacing Jerome Powell as the Federal Reserve Chair. And right now, Kevin Hassett is the name that's being floated around as the top choice to replace Jay Powell as the head of the Federal Reserve. And Kevin Hassett is pro-crypto. The Treasury Secretary, Scott Bessent, said that we could expect announcement of the new Fed chair even before Christmas, which is, of course, very, very bullish.
Yeah, I think that there's a very, very good chance that the president will make an announcement before Christmas, but it's his prerogative whether it's before the Christmas holidays in the New Year's, but things are moving along very well.
Moving on, New Zealand will add Bitcoin to the school curriculum. This came out a couple of days ago. The Bolivian government will integrate Ethereum into its financial ecosystem. So you're seeing government level adoption for cryptocurrency. Of course, we also saw news this week. China says Bitcoin and crypto have no legal status and orders strict enforcement amid rising speculation. China has been anti-Bitcoin, anti-crypto for a while now. They flip-flop all the time between making it illegal or making it legal. So this is not really a huge deal to me personally, but I wanted to include it in the video anyways. Here you have the Treasury Secretary, Scott Bessent, again talking about how influential crypto is going to be. Let's give a listen.
Going big on digital assets. So Trump administration has made digital assets a priority. Past administration starved and almost made extinct a lot of these companies and pushed it offshore. So what we want to do is apply the highest U.S. regulatory and AML standards to digital assets, especially stablecoins. And I've seen estimates that just over the short term, stablecoins could create $2 trillion of demand for U.S. Treasuries and Treasury bills. To put that in context, the number is probably about $300 billion right now.
Could create $2 trillion of demand for U.S. Treasuries, and that number is $300 billion right now. And that, in a nutshell, speaks to why the government is so bullish on digital assets in general, in particular stablecoins, because they see it as a massive opportunity, saying that the administration is going to be betting big on crypto. And of course, you heard Trump earlier in this video saying how he wants to make the US the leading authority in crypto. Here you have US Representative Warren Davidson talking about the US potentially funding a strategic Bitcoin reserve simply by accepting taxes in Bitcoin. We'll give this a quick listen as well.
Introduced the Bitcoin for America Act, which would allow Americans to pay their federal taxes in Bitcoin. Tell us about this.
Well, look, we're talking about affordability. That's just your dollar's been getting crushed. You know, the house that you live in didn't inherently get more valuable. The money that you measure it in got worth less. And gold is another indicator. One of the best performers in the past year, 2 years has been gold. One of the worst performers has been the dollar. So a lot of people hold other assets. Bitcoin's been one of the big rises over last 10 years for sure. And you can pay your taxes in Bitcoin and avoid capital gains on that. But the president created a strategic Bitcoin reserve. How do you fund it? Well, having one control point, the treasurer, the Secretary of Treasury, control it makes sense. But you can fund it with no government spending just by collecting Bitcoin as payments for taxes. So that's what the Bitcoin for America Act does.
This is a proposal, the Bitcoin for America Act. This is obviously not enforced yet, but I think it's an interesting proposal that we should keep an eye on because we already know the administration's stance on digital assets and also how they're approaching stablecoins in general. So I think this could be something that's interesting from a macro perspective for us to follow up on later. Let's move on now to our next category, which is adoption. So here I see Ripple stablecoin on Ethereum surpassing $1 billion in market cap within 12 months of launching, and you can see the parabolic rise here. You have Sam Altcoin here who responded, also highlighting the stablecoin market caps, with Ethereum being the largest one relative to all of these other markets here. And he also shared this as well in response to Europe's largest asset manager, Amundi, launches first tokenized share for Euro money market fund on Ethereum. Here, Sam Altcoin highlighted the real world asset tokenization could reach 30 trillion by 2030. Ethereum and its layer 2s are home to 77% of real world asset value on public blockchains. So Ethereum is 50%, and of course the layer 2s are about 25%, and everybody else is a minor sliver in the tokenization market. BMNR bulls here shared that Walmart is integrating Bitcoin and crypto payments through OnePay Cash. I'm not sure how breaking this is. I think we talked about this a couple of weeks ago for the Walmart adoption. But either way, the volume that Walmart has is undeniable. So that's going to be very bullish for the ecosystem in general. Here you have another post by Leon, and who says that there's over 30 million transactions in a single day across Ethereum mainnet plus the layer 2s. Here you can see the transaction count continues to reach new highs. It's the fastest scaling environment in crypto. The daily activity is up more than 5-fold since Q1. And here we see the CEO of Sharplink talking about stablecoins and tokenization. Let's give it a listen.
We are at the early stages. I think we are vastly underestimating the growth of stablecoins. Tokenization in its infancy, there's around $31 billion of funds, stock, bonds, real estate, commodities that are tokenized. Yet you hear the loudest and smartest voices in this space. Larry Fink on an earnings call on October 14th at BlackRock is basically saying his vision is all assets will be tokenized. And then you're talking about trillions and trillions of assets coming online. We believe that that global neutral settlement layer will be Ethereum. So I think there's massive encouragement here. I think what we need to be wary about is not to be thinking in 1 week cycles. And I do think we're going to end up seeing, my prediction for 2026 is significant growth in institutional adoption.
Here you have a CEO of a publicly traded Ethereum digital asset treasury company in Sharplink. Of course, SBET is the ticker. And he's saying we shouldn't be cherry picking 1 week performances because the institutional adoption is massive and it's happening at a rapid pace. This is exactly what I've been saying in all of my previous videos, is by us focusing on 1 week increments for BMNR and also for Ethereum, that's the wrong way to look at it. You're missing the forest for the trees. And ultimately, that's one of the major reasons why I make these videos, is to highlight everything that's going on behind the scenes. So if you do enjoy these videos, please share them out, drop a like, and drop a comment letting me know, and I'll continue making more of them. Let's continue. Here you have Europe's $48 billion fintech giant Revolut is going to integrate into the Bitcoin Lightning Network with over 50 million members. Moving back to Ethereum, the throughput just hit 2.1 billion gas per second on a 7-day basis, the highest sustained compute load ever recorded on mainnet. So obviously this speaks to the demand engine accelerating for Ethereum as well. Joseph made a post yesterday looking at the stablecoin supply broken out by chain. We can see Ethereum is by far the leader there as of November 2025. And in this post, he highlights the network effect across tokenization, stablecoins, and DeFi all being very dominant as the major chain that all of this activity is happening on. Here you have Trust Wallet supporting Apple Pay in 45 countries, obviously bullish for Bitcoin and bullish for the entire ecosystem. Eric Trump here said the Trump organization is going to start accepting Bitcoin across all properties. So obviously this speaks to crypto adoption in general. And again, I'm using Bitcoin and Ethereum interchangeably here as it speaks to the distinction between traditional finance and DeFi, right? So let's take a listen very quickly to Eric Trump confirming this news.
We're going to start accepting Bitcoin. We're going to start accepting all cryptocurrencies if you want to stay at one of the Trump properties. It's just modern day finance. It's how things are going to interact. You're no longer going to be relegated to have to get your wire transfer out.
That move towards blockchain technology in general is going to happen across the board. And sure, some of it is going to go into the Bitcoin ecosystem and some of it is going to go into the Ethereum ecosystem, but both are going to meaningfully grow as a result of these secular tailwinds. And not to mention, this guy is the president's son, right? And if you have the president saying we want to become a world leader in the crypto space, and then you have Eric Trump saying we're going to accept it in all of the Trump properties, obviously there's something going on beneath the surface there. Here you have Leon saying half of all payment transactions on Polygon are small transfers between $10 and $100. This is exactly the range of everyday card swipes and merchant payments, which is why Polygon is turning into a core rail for crypto cards and PayFi apps. Small payments alone crossed 500,000 transactions in November 2025, up 23% versus October based on data from the main payment providers on Polygon. So that's MoonPay, Revolut, Coinbase, and others. And so you can see the amount of small transactions up to $100 is exploding. So again, this speaks to the adoption of Polygon and of course of Ethereum in general. And of course, from a stablecoin perspective, Ethereum sees the biggest supply changes consistently week in and week out. Here you have MasterCard is partnering, in fact, with Polygon to enable crypto payments using simple usernames. No more long wallet addresses, no more friction, real world payments powered by Web3. And so that's MasterCard. But on the other hand, you also have Visa, who processes about $365 million per month through crypto cards. 10 of 13 trackable programs use Visa versus only 3 that use MasterCard. Teams choose Visa because it's faster, cheaper to launch, and less restrictive, and MasterCard still has higher friction. You can see the stablecoin monthly volume here of Visa is massive compared to MasterCard. This is also probably why they're partnering with Polygon to increase those numbers. But really what you're having here is you're having the two biggest players in the space competing in the speed at which they adopt Web3. Let's move on now to some macro news that's happening around crypto and around the market sentiment in general. So here you can see the Bitcoin monthly close. Generally speaking, every time Bitcoin closes negative in November, they're also going to close negative in December, which is obviously not great news to see. So you can see these patterns repeat historically here. Every red November has been followed by another red December. So there could be more volatility. Of course, we are still in extreme fear territory in the market as a whole. Interestingly enough, there was this new interview with Tom Lee that came out just 4 days ago. Here you have a clip that was posted by Sam Altcoin of that wider interview. So let's give a listen to this clip here that was cut up by Sam Altcoin.
I think for anyone who's involved in crypto for a long time knows this, and so there's many who are new, but crypto has declines and we're not necessarily in a bear market and it feels terrible. In fact, that's what you have to be mindful of, is that it's a hyper volatile space. So it feels terrible now, but just like in 2024, crypto felt terrible for many months, and then we've had these big moves.
Yeah, you have the meltdown and you have the melt up. Volatility works in both directions. Before I let you go, any price targets for ETH?
Yeah, I think in the near term, there's downside, maybe to 2,500, but that's minor compared to the upside of trying to discount a super cycle. So we think ETH can be 7,000, 9,000 by the end of January, and that's a huge recovery move, but that's also pretty typical of what could happen in the fourth quarter.
I hope you're right, sir. That would be music to my ears.
So I think Tom highlights it very well here, saying that there's going to be volatility, but he expects the asymmetric reward to risk ratio to shine through because we are in a super cycle for Ethereum. And there's some macro catalysts for us to have a potentially better December than expected. One of them is the rate cut probability. So this is the CME Fed Watch tool. And as we know, the Fed is going to be meeting in December. And this is, of course, live. Here you see the probabilities for a December rate cut are currently sitting at 86.4% for a rate cut and 13% for no rate cut. This has fluctuated wildly. Here you have the poly market for a Fed rate decision in December. And as you can see, last week, these were just basically at a toss up here. You had no change at 54% and 25 bips at 44%. And over the past week, these have massively broken apart to the point where you now have an 87% chance, according to Polymarket and the CME Fed Watch tool, of a 25 basis point rate cut in December. And you have about a 12%, 13% chance of rates staying flat. You also have a 1% chance of a 50 basis point cut, which I think would be very desperate. Here you have JP Morgan also saying they're expecting a rate cut in December as well. And of course, liquidity is switching back on because, as we know, quantitative tightening is stopping on December 1st. The last time this happened, Bitcoin dominance topped out. If history repeats, this is going to be very bullish for altcoins. And we can see the same thing happening with regards to Bitcoin dominance topping out, which I'll show you in the technical patterns. But here you see quantitative tightening, which is ending soon. Quantitative easing is going to be the next feasible step. Another rate cut is going to be hitting over the next 2 weeks. Liquidity is coming back into the markets. BTIG here says Bitcoin can rally back to 100,000. That's largely what we've been seeing. Here you see the Coinbase Bitcoin Premium Index has been very bullish as of the last week. US spot demand is slowly recovering. And here's an interesting segment because if we go back to this interview, this is Sam Altcoin again. Here's an interesting piece of Tom Lee saying that the dip was essentially manufactured.
Ethereum entering a super cycle. You talk about stablecoins, as we mentioned, being that chat GPT moment. You've made a 60K call on ETH, but right now the market seems to be thinking about things differently. We see a pullback, ETH pullback under 3K. Personally, I think it's a great entry point. Why do you think this disconnects for something that is so obvious to you, pretty obvious to me? Why are we trading as we're trading right now with Ethereum?
Ethereum and Bitcoin are public tokens. And so their price isn't going to be purely anchored on fundamentals. They're going to be reflecting investors' perceptions because both Bitcoin and Ethereum are not mature platforms. Their best utility and growth and innovation are in the years ahead, right? So we're 10 years in, but there's more growth in the future. The percentage of market share of crypto of total assets is so small that we know that mathematically that's true. Whenever when you have something that has a hyper growth on ramp and you're discounting the future, it's going to be very volatile. So does Ethereum's price going from 4,800 to 2,800? I mean, that is a staggering decline, but that probably is a minor change in 2030 fundamentals that is being priced and repriced by investors. And that's why there's hyper volatility. It's one reason why BitMine ended up engaging Tom DeMark as a strategic advisor, because he is the king of sort of price discovery. He is the father of systematic timing. And in our conversations, when he looks at Ethereum, he sees what looks like engineered or systematic liquidation taking place. So there is someone that is, in crypto, we know it's market makers play a big role, but there's someone that is probably capital constrained and is therefore bleeding or having to sell reflexively as price falls. That process is painful, but in his sort of rough timing range, his downside target, and we talked about this a few weeks ago, was 2,500 for ETH. So I think we're so close to that. It would be ideal actually for us to actually bleed to that level, because then that is creating what he calls a buy setup. A bottom in prices for him is when the last seller has sold, so that a stock or crypto no longer falls on bad news. I mean, that's what he thinks makes a bottom. So it would, I think, be a better situation to see crypto prices bleed lower to 2,500. But it could reverse at any time, because markets don't have to do what ends up being an ideal scenario.
This clip is incredibly bullish, and if time constraint was not a factor, I would play it again and again for you guys. Tom Lee called it an engineered liquidation, basically saying it's not fundamentals that are causing the scenario to fall. And he quotes DeMark, which BitMine recently partnered with, in saying that an ideal Ethereum floor would be around 2,500, but a major reversal can happen regardless. And the reason why this is important is because it does not highlight a fundamental weakness. It was just a setup to go higher. And he still thinks we can reach 9,000 by January 2026. He still thinks we're in a super cycle. And remember, Tom Lee's long-term thesis for Ethereum is 60,000 per coin. Under 3,000 for ETH is a smart entry point for institutional money to start flowing in and for us to go back higher. I, in fact, bought ETH under 3,000 last weekend at 2,800 because I believe the same. And I think that this drawdown, yes, it's part of the baked-in volatility of crypto as a whole. And in fact, it is going to be temporary. It's something that happens today as a result of that volatility. And the fact of the matter is that some people are going to take advantage of the volatility and buy and ride it higher. And some people are going to get shaken out because the fear is going to be overwhelming for their portfolios and they think it's going to go lower. The fact of the matter is we have a lot of macro catalysts that are happening. And I've talked about some of them. Here I have a post from Jesse who highlights a lot of them. Quantitative tightening is ending. Rate cuts are coming. The geopolitical situation is looking better. There's more trade deals. There's crypto legislature that's passing. You're going to see quantitative easing. Jobs and data is looking to accelerate. In fact, I saw Black Friday sales had reached like record levels, which is obviously good for the underlying economy in general. So there's obviously very bullish catalysts on the horizon. And now let's talk a little bit about technical analysis, starting with this Bitcoin ETH bull flag ratio. So you can see the relationship between Bitcoin and ETH. As we mentioned previously, when Bitcoin tops out, the altcoins start to rise. And we saw that Bitcoin was starting to top out. And we're seeing now ETH Bitcoin, the relationship between the two is now seeing a breakout, right? This is the setup where ETH starts to outperform Bitcoin. And we're now starting to see that manifest and come to fruition. Bitcoin dominance here is falling. ETH Bitcoin is rising above the support zones. It looks like Ethereum could potentially outperform Bitcoin as early as December and moving forward as this pattern continues to break out. In fact, Ethereum is now bouncing above the 3,000 levels and holding. Momentum is looking strong. If it loses 3,000, it can go right back down to 2,800. And in fact, it could even go to 2,500, which is what Tom Lee was highlighting in that interview. But we'll see what happens if it holds 3,000 or not. And I think that's going to be the main things. This is another chart of the Ethereum relief rally that we've had up to 3,000. It's bouncing all over the place. This is Fibonacci levels, which you're seeing here. 2616 is a level that I could potentially reach. You're seeing resistance levels all across the board here. There's a possibility for it to continue rising even further than this. This is a post that says that the major support has currently flipped to resistance. If Ethereum breaks above this level and stays there, we should see the price rally into the mid 3,000s throughout December. The markets are looking very bullish, and I think the catalysts are lined up in December to send us higher. And if we look at a multi-year view, we've seen a massive consolidation in this candle here with Ethereum, and we're starting to bounce out of it again. You can see the Bitcoin open interest on exchanges here is falling. Bitcoin as well is usually bouncing after that. BTIG said that they can go to 100,000, and Bitcoin fell into the $80,000 range and it bounced right back. Ethereum here is breaking out of this RSI pattern, which you can see. And again, if you look on a multi-year pattern, it's retesting this massive trend line here. And in the past, we've seen that a rally usually follows after it's retested this trend line here. So there's a lot of charts that I can point to. The clearest one would be just this breakout that we've seen. And I found it funny because Tom Lee responded to this post, which said the $3,000 wall is very hard to break. And he just said, hey, look, you got to be patient. But one of the biggest things that I find interesting and why I think ultimately we will go higher is because there is massive catalysts happening this week with regards to the Ethereum ecosystem. So here we saw a new record transactions per second on the Ethereum ecosystem above 31,000 TPS at its peak. So this speaks to a lot more activity. I found this funny. The CME group futures and options markets have been halted. Do you know what's never halted? The Ethereum ecosystem. And now I just want to remind everybody, we've been talking about this for a couple weeks now. The Fusaka upgrade is going to be going live this week, and it's going to be the biggest update in crypto that's happening in Ethereum. This is a major thread of all the things that are happening with regards to the Fusaka upgrade and what that means for users. Fusaka's upgrades are going to grow capacity, increasing the gas limits, and I'm going to talk about that in just a second, and more. This is a nice little infographic here with regards to what's happening in this upgrade. It's scaling the L1's throughput, resilience, coordination. It's scaling the blobs for L2s, and it's improving the user experience as a whole. Here you had BMNR Bulls talking about that user experience improvement, which is going to be coming on December 3rd this week, saying that it enables the same signature scheme used in iPhones, the technology behind Face ID, and the secure enclave. So you'll soon be able to confirm Ethereum transactions using your face without any seed phrases or friction, just native hardware level security. So face level authentication is going to become standard for Ethereum wallets. And of course, all of these upgrades play a massive role in increasing the total adoption for Ethereum. Here you can see some other benefits: cheaper fees, higher transactions per second, smoother UX, 20x more capacity with PeerDOS, 33% more throughput with 60 million gas limit, improved UX with the passkey support. And as you get a better ecosystem for Ethereum, you're going to start to get more adoption. So here you have Kira that says Fusaka is going to be in 7 days. L2s are going to start burning ETH. Coinbase's base is going to burn ETH. Robinhood's L2s are going to burn ETH. OpenAI's WorldChain, Sony, Alibaba, UAE, Kraken, all of them are going to start burning more and more ETH as the adoption is going to increase. Corporations are going to do the same. So it's bullish for L2s. It's bullish for Ethereum ecosystem as a whole. Every company in the world will launch their own layer 2. Every alt L1 will become a layer 2 and start burning Ethereum. And as that happens, more and more will we see the inflation start to shrink further in Ethereum. And that's very bullish. Here we have Joseph saying there's only 7 days left until Fusaka, and all of these benefits are going to be happening. It's going to be faster, it's going to be cheaper, it's going to be more scalable, and it's going to be happening in a more user-friendly way. That's all going to lead to more adoption, it's going to lead to more demand, and it's going to lead to more users, more developers, more predictable fees. This is by far going to be the biggest evolution in the Ethereum ecosystem. You had a vote earlier this week around the block gas limit, and over 50% of the validators voted yes. The Fusaka upgrade is going to obviously reduce gas fees during peak times. From 45 million to 60 million, over half of the validators already voted for this. So here you can see the gas limit at 60 million as it's now been raised. I agree with this post. We're entering an abundance era for Ethereum on both L1s and L2s. And I want to share my favorite chart and that I want to encapsulate this video with. Of course, I have other topics for us to talk about in just a second, but this is really my favorite chart. This is what happened in the last upgrade, and you saw a massive boost, 38% increase in Ethereum immediately after this happened. And this is what's going to be happening on December 3rd in just a few days. And of course, we could potentially see a massive boost in Ethereum. I want to talk very quickly about valuation and then about BMNR. This is Bitcoin versus global liquidity. You're seeing a massive gap here that started around June or July of this year. And this post simply says that Bitcoin is undervalued compared to global liquidity. Here you have Ethereum. 10 out of the 12 Ethereum valuation models say that Ethereum is undervalued. So you can see some fair value assessments here of what Ethereum should be trading at. Relative to these different valuation models. And there's basically a 10x difference in terms of these valuation models. So you can subscribe to whatever you want. This is another post here that says Ethereum is at least 50% undervalued, even including TradFi valuation models like price to earnings that drag it down. And of course, I think that argument is easy to make with Ethereum at $3,000. It's been at $3,000 for years, and bears will say it's dead money, and bulls will say it's just a consolidation and it's going to explode higher. Of course, time will tell which one of those is actually the case. I think you know where my bias sits. Let me now wrap up this video with BMNR. So BMNR is up 40% from the $24 lows that it formed last week. This post here by Peter says that it can hit $40 next. This is Arkham here that's posting. Tom Lee is still buying Ethereum. Bitmine's wallet saw an inflow of 44.3 million ETH and have purchased 185 million ETH over the past week alone. Bitmine is continuously buying more and more Ethereum. You can see the actual transactions here, 14,000 ETH additional this week. I found this interesting. Latest short interest data shows a 3% increase in short interest for BMNR and a 13.5% increase in short interest for SBET. So you can come to your own conclusions, but it's interesting because it also correlates with this institutional ownership increasing. So you saw the institutional ownership in just the past 2 weeks alone go from 6% to 32%. And of course, a lot of that is institutions plowing into the biggest name in the space, which is, of course, BMNR. Here you have a thesis around the price predictions for what BMNR should be trading at relative to what Ethereum is trading at. And you can see how high some of these numbers go. So you can see these price targets obviously scale to massive numbers if you add a multiple of NAV. And right now, Bitmine is not really trading at a massive multiple to NAV. So I would stick towards these numbers relative to these numbers, but it can get really, really crazy really quickly, depending on the reinvestment of staking rewards and the multiple to NAV that Bitmine has in the future. If Ethereum starts to go up to 10K or 20K, then of course, Bitmine is going to go to some crazy, crazy levels that you've never before seen. Remember, Bitmine has $800 million in cash. They have no leverage and they have nothing staked as of right now. The staking is going to be starting probably in January or February. And right now, they're in full accumulation mode. And so we're seeing massive accumulation in Ethereum from stablecoins, from tokenization. We're seeing all of the major financial institutions start to plow in. MasterCard, Visa, Robinhood, JP Morgan Chase, Fidelity, and others are starting to adopt Ethereum more and more every single week. The ecosystem is evolving beyond speculation. It's becoming the backbone for financial transactions. Web3 is reaching massive adoption, and yet Ethereum's token price is still at 3,000 per ETH. There is an upside that is asymmetric here from a reward to risk perspective. Bitmine is going to be a primary beneficiary of this upside. And this is all happening before the Fusaka upgrade, which is going to make Ethereum even more accessible, even faster, with even more transactions in the ecosystem. And it's all happening before Bitmine starts staking and generating more passive yield through those staking rewards, which is coming up in the next couple of months. So we're in for a treat, I think. This is going to be a roller coaster. It's going to be volatile, but I remain bullish on the Ethereum ecosystem and on BMNR because of all these advancements that I'm seeing behind the scenes. And it's similar to what the CEO of Sharplink said, let's not look at it on a 1 week basis or on a 2 week basis. Let's look at it on a multi-year basis to pinpoint the speed and the massive volume of this institutional adoption of the Ethereum ecosystem. So that concludes the BMNR weekly update recap video. If you do enjoy this video, please share this out so I can continue making content like this. Thank you so much for watching, and I will see you in the next one.